Saudi Arabia promised the world a future, powered by trillion-dollar cities and endless oil wealth. But behind the headlines and glossy mega projects, the cracks are widening. Now the question is, can the kingdom fix its economy before time runs out? But behind all that glitter lies a troubling reality. The Saudi economy is under pressure, and it's not getting better anytime soon. In fact, the deeper you look, the more it becomes clear. The crisis is real, and it's not going away. Let's start with oil, still the backbone of Saudi Arabia's economy. Despite the push for diversification, oil revenue still makes up more than 60% of the country's income. The problem? Global oil demand is unpredictable, and prices have been swinging up and down. Add in the fact that other countries, including the US and Russia, are pumping out more oil than ever, and Saudi Arabia finds itself in a tight spot. They tried cutting production to drive up prices, but that backfired, reducing income without creating the price hike they hoped for. At the same time, Saudi Arabia's ambitious Vision 2030 strategy is burning through cash fast. Projects like NEOM, The Line, and Qiddiya are projected to cost over $1 trillion. These aren't small investments. They're massive, high-risk ventures that may take decades to pay off if they succeed at all. In the meantime, the money to fund them has to come from somewhere. The Public Investment Fund, PIF, the kingdom's sovereign wealth fund, has taken center stage, but even it is under pressure. With huge outflows and high global borrowing costs, Saudi Arabia is now raising debt to keep projects alive. And then, there's the foreign investment problem. When Crown Prince Mohammed bin Salman unveiled Vision 2030, foreign investors were intrigued, but years later, the follow-through hasn't matched the promises. Red tape, political risk, and growing concerns over human rights have scared off many potential investors. The result, the inflow of foreign capital, something essential for long-term growth, has been far below expectations. Meanwhile, youth unemployment remains a major concern. About 2/3 of the Saudi population is under 35, and many of them are still jobless or underemployed. The government has created public sector jobs and pushed for Saudization in private companies. But progress has been slow. Without enough high-quality private sector jobs, young Saudis remain dependent on the state, which adds even more pressure on government finances. Inflation and rising costs have also crept into daily life. While Saudi Arabia once boasted of cheap living costs thanks to heavy subsidies, many of those supports have been rolled back. Gasoline, electricity, and even water are now more expensive. VAT was introduced in 2018 at 5% and later tripled to 15% during the pandemic. For a population used to government generosity, this has been a hard adjustment. Put it all together: oil revenue, massive spending, rising debt, underwhelming foreign investment, and a youth-heavy population struggling to find good jobs, and it's clear that Saudi Arabia's economy is walking a tightrope. And the worst part, the deeper challenges aren't being solved quickly enough. Vision 2030 was supposed to be a lifeline, but right now, it's looking more like a gamble. Saudi Arabia's efforts to diversify its economy have been ambitious. Not everything is going according to plan. At the heart of these efforts is Vision 2030, a master strategy launched in 2016 by Crown Prince Mohammed bin Salman. The goal? Reduce the country's dependence on oil and turn Saudi Arabia into a global investment hub, powered by tourism, tech, and futuristic megaprojects like NEOM. On paper, it sounds exciting. In practice, it's proving far more complex and costly. Let's start with the price of oil. Saudi Arabia still earns the bulk of its revenue from oil exports. Despite all the talk of diversification, oil remains the economic engine of the country. When prices are high, things look good. But when prices fall, as they often do, due to global factors, Saudi Arabia's economy feels the shock instantly. In 2020, oil prices crashed during the pandemic, and the government had to cut back spending, even raising VAT from 5% to 15%. That's a huge jump for a population used to decades of tax-free living. The oil market is also changing. Countries around the world are shifting towards renewable energy. Electric vehicles are replacing gas-powered ones, and global oil demand may peak in the coming decades. Saudi Arabia knows this, which is why it's trying to shift gears now. But timing is everything, and building a post-oil economy isn't something you do overnight, especially when oil still pays the bills. Take NEOM, for example, the $500 billion futuristic city rising out of the desert. It's meant to be a high-tech, AI-powered hub of innovation, tourism, and sustainability. But critics say it's far from realistic. The project has faced delays, cost overruns, and criticism over its human rights issues, particularly regarding forced relocations of local tribes. There are also concerns about whether global investors will actually follow through on their financial commitments, especially during uncertain global economic times. Other major investments have also faced setbacks. The Public Investment Fund, PIF, Saudi's massive sovereign wealth fund, has poured billions into international ventures like Uber, SoftBank, and even sports like golf. While some have worked out, others have underperformed or become politically controversial. These investments were meant to project Saudi Arabia as a global financial player, but they've also exposed the country to greater risk in unpredictable global markets. Then there's the issue of population. About 2/3 of Saudi Arabia's population is under the age of 35. That means millions of young people are entering the workforce every year, looking for jobs, but many of them have grown up expecting secure, well-paying government jobs. As the government cuts public spending and pushes Saudis toward private sector roles, there's resistance and not enough private sector opportunities to go around. Youth unemployment remains high, despite government incentives to hire locals over expats. Speaking of expats, Saudi Arabia has also been tightening labor laws to push more Saudis into the workforce. This sounds good in theory, but in practice, many industries from retail to construction still rely heavily on foreign labor. Some companies say they simply can't find enough trained local workers to replace expats without losing productivity or increasing costs. It's a difficult balancing act. Reform too slowly, and the economy stays stuck. Reform too fast, and you disrupt the system that currently keeps things running. Tourism was another major bet under Vision 2030. Saudi Arabia opened up to international tourists for the first time in 2019, launching new visa programs and promoting the country as a cultural and historical destination. The government invested heavily in resorts, events, and tourism infrastructure. Then came COVID-19, which shut down global travel and paused many of those plans. Even now, tourism numbers are far below targets. Some travelers remain hesitant due to the country's strict social rules or political controversies. Changing international perception takes time, and it's not something money alone can fix. One of the biggest financial pressures comes from maintaining the standard of living for Saudi citizens. The government still provides generous subsidies on fuel, water, and electricity, as well as free healthcare and education. But all of that is expensive and harder to afford when oil prices are unstable. Over the past few years, the government has started scaling back some of these benefits. That's made daily life more expensive for average Saudis, leading to frustration and social pressure. Reforming a welfare-heavy system is never easy, especially when the public isn't used to paying taxes or high utility bills. Meanwhile, the global economy is slowing down. High interest rates, inflation, and geopolitical tensions are affecting investment flows worldwide. And as competition rises from other Gulf countries like the UAE and Qatar, both of which have head starts in tourism, finance, and real estate, Saudi Arabia can't afford many missteps. Investors are watching closely to see if the kingdom can deliver on its bold promises, or if the scale of its ambition is simply too much, too fast. And yet, despite all these challenges, Saudi Arabia isn't backing down. The leadership remains committed to Vision 2030. Billions are still being spent on mega projects, entertainment events, sports takeovers, and international diplomacy. The country is pushing forward with reforms on everything from women's rights to business regulation. It's trying to open up its culture while holding on to its identity, a tough balancing act in a rapidly changing world. But the big question remains, is Saudi Arabia moving fast enough to build a truly sustainable economy? Or is it simply reshuffling the same oil money into new shapes? The answers aren't clear yet, but time is running out. Vision 2030 is now just 5 years away, and many of its key goals are still far from reality. If oil prices fall again, or if global investors lose patience, Saudi Arabia could find itself stuck between an old economy it's trying to leave behind and a new one that hasn't fully arrived. For now, the world watches. The kingdom has the money, the vision, and the power. But building a new economy isn't about headlines, it's about execution. And with so much on the line, even small missteps could lead to much bigger consequences. In the years ahead, if you found this insight helpful, don't forget to hit subscribe for more clear, no drama breakdowns of the world's biggest financial stories. Your support keeps us going.